Welcome to the Deep Dive. We're your shortcut to really understanding today's big global news stories. Our mission today, to cut through all that noise using our source, the top 10 global news list from the last 12 hours as of July 15th, 2025. And these headlines might seem separate, but we'll show you how they're actually pretty tightly connected by bigger economic and geopolitical stuff.
That's exactly right. As we go through this, you'll see two main things popping up again and again, trade tensions really ramping up, and, well, how global market sentiment is shifting. It's this interaction between them that's, driving a lot of what we're seeing.
Okay, so let's dig into that. The first thing that really jumps out is, those trade tensions. Specifically, we're seeing President Trump talking about 30% tariffs on imports from Mexico and the EU. I mean, on the face of it, that sounds like a pretty big shock to the system, doesn't it? But here's where it gets really interesting looking at the data. Despite these huge threats, the markets seem surprisingly resilient. Global stocks held steady, NASDAQ, even Bitcoin rallied, and silver hit a 14-year high. So what's going on there? How does that work?
What's fascinating, isn't it? It seems markets are almost paradoxically counting on some kind of diplomatic progress. They seem to be pricing that in, maybe betting these things won't fully escalate.
Ah, okay.
But it's also driving that safe haven flow we talked
Yeah.
about. Investors moving money into safer bets. Gold, for instance, classic example. It rallied about 0.5% to $3,360 an ounce. Even while everyone's kind of holding their breath for that June CPI data, that's going to be huge for what the Fed does with interest rates.
Right, the inflation numbers. So, okay, we see market sentiment, but what about actual companies? The bottom line, Q2 earnings are coming up for big banks. JP Morgan, Wells Fargo, Citi. Are analysts expecting these trade issues to really hit corporate margins? We saw Ericsson, for example, the Swedish telecom company. They actually beat profit estimates, 7 billion crowns. But they specifically said U.S. tariffs squeezed their margins, and their shares dipped, what, about 3%?
Yeah, and that Ericsson example is, well, it's spot on. It shows these aren't just abstract threats anymore. They have real-world consequences on profitability.
Right.
And if you zoom out a bit, look at China. Their Q2 GDP slowed down to 5.2%. Retail demand there is flagging too. That just amplifies the tariff risk because their own internal engine is sputtering a bit, maybe pushing Beijing towards more stimulus.
X globally.
Exactly. It really highlights how these trade tensions ripple outwards.
Okay, let's shift gears slightly. What about energy? That's always crucial. Oil prices dipped a bit, Brent, around $68.92, WTI about $66.63, after Trump set this 50-day deadline for U.S. sanctions on Russia. What's the read there?
Well, that deadline might ease the immediate supply pressure slightly,
Okay.
but the underlying risks from Russia's supply situation haven't gone away. Plus, China's still importing quite a bit, which helps support prices. And on a related note, you've got the EU getting close to its 18th sanctions package against Russia. They're targeting energy, banking, ways Russia might be bypassing current sanctions. So that geopolitical pressure is definitely still on. It's sustained.
Yeah, that's not going away. And yet, despite all this, the tariffs, the sanctions, the potential slowdowns, there's this thread of optimism. Bank of America survey showing record high optimism among fund managers. Is that realistic or maybe a bit too hopeful?
I think the key word there is rotation. It's not necessarily blind optimism driving everything up. It seems like fund managers are strategically moving money around rather than just, selling everything off in a panic. Asian and European markets were mostly up too.
So a strategic shift.
Exactly. But the sources do warn about bond yields and the strength of the dollar. They call them potential flashpoints, meaning those are the areas that could suddenly flare up and cause some real volatility. So definitely something to watch.
Okay, so let's bring this all together for someone trying to make sense of the headlines. We've seen how tariffs, sanctions, company earnings, energy prices, they're all tangled up, right? Shaping how markets feel day to day.
Absolutely. The core takeaway, I think, is that constant push and pull between the threats and the resilience. Markets aren't just one single thing. They react in complex ways like those safe haven flows or the strategic rotations we just mentioned. They're always hunting for the next bit of data, the next hint of diplomatic progress.
Yeah.
So, thinking critically about the why behind the numbers is key, not just the what.
Right. So as we wrap up this deep dive, maybe a final thought for you to consider. So much seems to be riding on this idea of diplomatic progress, kind of smoothing things over. But what if that progress stalls or even goes backwards? And thinking about what's next. Which specific piece of news is it? The CPI numbers, Q2 earnings, another geopolitical move. Which one do you think will be the real next game changer in this whole complex picture? Something to think about.